Most people think buying an energy ETF is a simple bet on the price of oil. Crude goes up, your investment goes up. Simple, right? Well, as the market's been showing us lately, the real story is a whole lot more interesting. Let's dig in.
And this right here is the puzzle that's confusing a lot of investors. We've got a major geopolitical event, a classic supply shock that sends oil futures screaming higher. And yet the main way people invest in this sector, the iShares Global Energy ETF, it's barely moved. So what gives?
And look at this chart. It lays the disconnect bare. A 40% rocket ship for the raw commodity versus a tiny 2% bump for the ETF. That's not a gap, that's a canyon. And it tells us that there's a fundamental misunderstanding about what these investments actually are.
Okay, so to solve this puzzle, we have to get one core idea straight from the get-go. And it's this. You're not buying a barrel of oil, you're buying a business.
Think about it this way. On one hand, when you buy crude oil futures, you're making a direct bet on its daily price. It's that simple. But when you buy an ETF like IXC, you're becoming a part owner in a whole portfolio of global corporations. We're talking about massive, complex businesses with CEOs, long-term strategies, and shareholder meetings. Things that a barrel of oil just doesn't have.
So, a company's stock price lives and dies by its business fundamentals. Things like its profit margins, its capital discipline, which is just a fancy way of asking if they're spending their money wisely. And critically, what the market thinks oil prices will be years from now, not just what they are this afternoon.
All right, so you might be thinking, but come on, the price of oil has to matter, right? And you are absolutely correct. It does. The relationship is definitely there. It's just not the straight line you might expect. So here's how it actually flows. Step 1, sure, higher oil prices are great for revenue. That's the easy part. But then comes step 2. Other things like refining margins or rising operational costs can start eating away at those profits. And that leads to the most important part, step 3. The stock market is always trying to look around the corner. It's pricing in what it expects to happen in the future, not just what's happening right now.
And you know what? We have seen this movie before. This quote from David Hewitt nails it. Back in 2008, the exact same thing happened. Oil stocks basically called the market's bluff, figuring out that $147 a barrel was totally unsustainable. And they were right. It looks like the market is making the same call today, that this price spike is a temporary shock from geopolitical fear, not a permanent new reality.
So to really get this, we need to pop the hood and see what's actually inside the fund at the heart of all this. Let's take a look at the iShares Global Energy ETF, ticker IXC.
Now, a sector ETF is basically a way to invest in one specific chunk of the economy, like tech, healthcare, or in our case, energy. The playlist analogy is perfect. Instead of you having to pick all the individual stocks, the ETF hands you a ready-made collection that represents the whole genre.
So what's on the IXC playlist? Well, it's basically the greatest hits of big oil. You're not just buying some abstract idea of energy. You're buying huge chunks of the world's largest energy companies. I mean, look at this. Over 18% is in ExxonMobil alone, more than 10% in Chevron. In fact, these 5 companies make up almost half of the entire fund. And if we slice it by what these companies do, it gets even clearer. Nearly 56% of your investment is in what they call integrated oil and gas. These are the giants, the Exxons and Shells of the world, that do the whole shebang, from drilling wells to refining oil into gasoline and selling it at the pump. Their business is a complicated balancing act, and it's way more than just the price of crude.
Okay, so let's put all the pieces together. When you buy an energy ETF, what's the real bet you're making?
This is it. This is the whole game. An energy ETF isn't a short-term gamble on today's oil price. It is a long-term bet on the strategy, the discipline, and the management skill of some of the biggest companies on the planet. So let's wrap this with the key takeaways. First, the market is smart enough to see the difference between a short-term panic and a real long-term change. Second, remember you're investing in businesses, not just a raw material. And finally, and this is maybe the most important, you absolutely have to know what you own. What's inside the ETF is what will drive your results, period.
And that really brings us to the final thought I want to leave you with. The next time you see a frantic headline about oil prices shooting up, this should completely change how you see it. Your first question won't be, where's the price of oil going? It'll be, okay, how are the companies I own going to navigate this and create value?
Of course, please remember, this is all for informational purposes. It is not financial advice, so please make sure you consult with a licensed financial advisor before making any investment decisions.